Hello guys, this is FairBinaryOptions.com and we are continuing our project here, Binary Options Academy. So if you go on the website on www.fairbinaryoptions.com, as you can see here, and you check the Academy section, you will see that we have a lot of educational materials there, and besides two recordings or two mini educational series that are coming for different trading setups, you will have a text explaining what we are discussing here, but the analysis here or the recordings here are going to be posted on the YouTube channel of FairBinaryOptions.com as well. So make sure you subscribe to that channel as well. Now this time we are going to talk about the contracting triangles as continuation patterns, or triangles as continuation patterns. In this case, the contracting triangles. And I would say that this is a classical example on the Euro-US dollar, the 1 hour chart, as things let's say moved in the same way that they were supposed to do. Now, a contracting triangle first of all has 5 legs. So let's take a polyline, and it goes like this: A, B, C, D, E. So this is a contracting triangle. Whenever a contracting triangle acts as a continuation pattern, it means that price travels to the downside, for example, makes the triangular formation, and then continues in the same direction as the previous trend. So this is the trend, the bearish trend, or the downward trend. This is the contracting triangle, and this is the second, the continuation of the trend, or the moment when the trend is resuming the slide. The same is happening in the bullish trend, only that the first move to the upside is bullish, then the triangular formation, and then the break to the upside as well. Now this triangle here is a contracting triangle, and it should be labeled with A, B, C, D, E, and this one is being called a horizontal contracting triangle, so it should be labeled like this, being wave A, and the B wave, and the C wave, D, and E. So A, B, C, D, E, A, B, C, D, E, and then normally, of course, price should break to the upside here. So I've made a triangle exactly on the wrong side, thinking of a bullish trend. So this should be something like this: A. Let me take a polyline. A, B, C, D, E, the contracting triangle, and then the price to break lower. So A, B. The example that I showed you on the previous triangle was on a bullish trend, but I would like to show you one on the bearish trend, as our example on the Euro-US dollar is actually dealing with a bearish trend here. So it moves like any contracting triangle between the A and C trend lines and the B to D ones. And this triangle, or such a triangle, is being considered a horizontal contracting triangle. It has some measure moves. The measure move comes from the thrust of the triangle, and the thrust of the triangle is considered to be 75% when compared with the longest wave of the triangle. In this case here, the longest wave should be wave A. If the triangle is of a different type, it should be considered again 75% when compared with the longest leg of a contracting triangle. In our case here being wave A, so the logical thing to do is to take a Fibonacci retracement, to measure the length of the longest wave there, to take 75% out of it, something like this, and then project it by the moment of time that the E wave ended, and that should be the thrust of the triangle, 75% of the longest wave. Well, this is the theory. This is what we should look for when trading binary options. So basically, at the moment or when this triangle is about to end, we should look into buying put options, expecting at least the thrust of the triangle to come. What does this have to do with the Euro US dollar on the 1 hour chart here? Well, you're about to find out the clues or the analysis on the Euro US dollar with the second part here. So the theory came in the first part and the example on the second part. So bear with us for the second part here on fairbinaryoptions.com. We are in the Binary Options Academy project explaining how to trade binary options using triangles as continuation patterns.